Hi, this is Mike Eash, your friendly neighborhood licensed mortgage expert. And as you see, I am sporting the college professor look today because we are talking Mortgage University. A few lessons, a few sessions, a few classes to help newbies navigate the mortgage process. So in our session today, we're going to deal with the question, how is it that you determine what I can afford? Well, it's not something that's just arbitrary. There are government rules and regulations that determine how we are allowed to approve anyone. And it's all the concept of the ability to repay. That's the ATR. And that is made up of information about your assets, your income, your credit, and your liabilities. So I have to ask questions about all these things, and certain ratios have to be in proper order for it to be approved. Now, once we have all that information, we typically run it through what's called an automated underwriting system and get an approval that way. If we get an automated approval, the rest of the process is very easy. If we get what's called a manual approval or a referred type of approval, then we have to go by a different set of rules. So it really all depends on each one of those factors. So let's break down those factors. One ratio that brings a lot of that into play is called the debt to income ratio. Every program has a debt to income ratio that is acceptable in your approval. So it's just what it sounds. Your debt, all your debts, and that is the debts that show up on your credit report, not other debts like your phone bill or things like that. Those don't show up on your credit report. So your credit report debts divided by your gross income. So your debt divided by your income is a ratio. And if that ratio is within certain parameters, then you can get automated approval. Other parameters are required for the manual approval. So that's one of the big factors that will work. So you may be paying a certain amount for your rent right now, and the amount that you can afford in a house may or may not be similar to that amount. I've had a lot of people tell me, hey, I know I can afford it because I'm paying that in rent right now. Well, their ratios did not come out accordingly, and there's just absolutely nothing that we can do about that. So I often have to then recommend pay off some debts to get your ratio in better shape, or maybe look at including someone else's income as a cosigner. Those are options for getting that. So that's how we determine that portion of what you qualify for. Another portion is, can you make a down payment? Every program has certain requirements that you have certain funds available for closing and or for reserves that you must have. We certainly don't want to take all your money and leave you with nothing when it's time to buy a house. And FHA, for example, they have very specific reserve requirements factored into the automated approval. And if we're doing a manual approval, certain amounts, numbers of months of reserves are required for you to get that manual approval. So you have to have some assets. That's a factor. So if you don't have assets, like I said, you can't get approved if you only have, one of these factors working in your favor. Another one, every program requires you to have an acceptable credit score. That's a big deal. So if you don't have good credit and you still have income, you're probably going to be out of luck. If you have great credit and not enough income, you're probably going to be out of luck. So all those factors have to go together. That's called the ability to repay. Does that all make sense? All right, let me know if you have any questions about that. Thank you for attending this session of Mortgage University. As I said earlier, I am a licensed mortgage professional, so I'm here to help you get a loan, to refinance a loan, to answer any questions that you have, because I really want you to understand the mortgage process better. My goal, of course, is to make sure that this is understandable to you and done in layman's terms. So please let me know how I've done. Respond on my Facebook or on my YouTube.